Hey everyone, welcome to our Asset Management Friday segment of the Passive Income Through Multifamily Real Estate podcast. I'm your co-host Kyle Mitchell, also joined by Gary Lipsky. This segment is focused on educating operators, building better systems, and becoming a best-in-class operator. Since we're also live on Facebook right now, make sure to type in any questions you have in the comment section below. Also be sure to check out our Facebook group, Passive Income Through Multifamily Real Estate. All right, today on the show we have Spencer Hilligoss. Welcome and thanks for being on the show.
Yeah, thanks so much for having me, Kyle. And thank you, Gary. This is a really great show so far, and I really appreciate the depth you guys go into. Very excited to be here.
Awesome. Well, if you can start by telling the listeners a little bit more about yourself and what you currently do.
Yeah, happy to. So I currently lead Madison Investing. I'm actually based out here in the Bay Area in Alameda. It's right between Oakland and San Francisco. And so we've actually been in the commercial real estate side now for coming up on about 4 years. But prior to that, I actually grew up in a real estate household. And so my dad was one of the top residential brokers in the country. And I absolutely hated real estate after growing up in that environment. I ran screaming out of that into 13 years of technology. And so across 5 software companies, I was an operations and sales leader for quite a while. And I finally got the bug on multifamily and finally went full-time just about 4 months ago. So great timing, right? Going right into a black swan triggered event recession. So multifamily is the lifeblood now, and it's really just a blast every single day. But of course, you still hit some bumps in the road and you get some great learnings along the way. So excited to share some of those today.
Well, welcome, Spencer. Let's talk about investor relations. How often do you communicate with your investors, and how do you do that?
Yeah, so I think it takes really 2 different tracks for me. The first one would be, if you're in the middle of a hold period, so we've done now 18 different projects. And of all those projects, I would say monthly has now become an expectation. Quarterly, of course, is like a traditional and actually effective cadence to communicate to investors, in the LP group for any deal. So you want to send out minimum quarterly. We strive for monthly updates. And you're talking about occupancy rates, you're talking about the trends, for economic and physical vacancy. And you're talking about if there's a value add, all of the deals we have done have been value add. And so how are you doing on those renovations? And so we do a monthly update for the vast majority of our projects. Now, there have been a couple, we've done mostly single asset transactions. We've done one fund, and I would say a key distinction between funds and single assets is that on the fund, it tends to be a little trickier to nail down a really specific set of timelines. And even getting into some of the operations can just confuse the LP crowd. As a passive investor first and kind of a co-sponsor GP second, I would just say I really love to be understood. I'm not trying to sound smart. And I take that from a mentor that I actually had in my corporate career. And it just stuck with me for a very long time, guys. It was like, is it more important to sound smart, or is it more important to be understood? And so I try to really go above and beyond and communicate with both authenticity as well as just keeping it clean and simple on the monthly updates. I will say on the informal side, everyone's going to do this differently. And this is the second track I was going to mention. It just takes text messages and real phone calls, and I think going beyond a transactional business relationship, everyone talks about in business and particularly in real estate, how so much of this is about relationships, and it truly is. But going beyond that, do you actually take the time outside the scope of a deal to go and just ask, how are people doing? How is their family? Are the kids doing okay? Now more than ever, amongst all of this stuff going on in the world right now, people want to know that others are there to listen to them and to empathize with them. And so I know I don't want to get too touchy-feely for this crowd. We're talking about asset management, but I do think that there's a human element to that as well.
Absolutely. That's really good advice. In your communication to your investors, do you include rent rolls or financial reports, or you kind of just stay away from them and just give them some data points?
Yeah. I think a picture speaks 1,000 words. And so whenever possible, if there is a really great single shot or a series of photos you can put in Dropbox or Google Drive. If you just remodeled a unit and it's a first look at the new style of an interior renovation, you got to show that. That's huge. Even something as simple as new signage, maybe a new leasing office, amenities, work on the amenities, all that stuff really, really resonates. And I think that putting that in matters a lot. You already nailed it on the reporting. Every quarter, what we strive to do at a minimum is send out, rent roll, make sure people understand who's living there, who's paying. Also make sure that people get a profit and loss statement so they can understand the economics behind it. I will say that what's fascinating, though, is when you share that type of insight, there's such a mixed bag of how people actually look at that stuff. I would say that, I don't know what you guys experience, but across our whole portfolio, I would say maybe 20 to 30% max of the people who receive those reports actually dig into them. But if you don't send them out, that 20 to 30% will absolutely feel like they're getting shortchanged, and for all the right reasons. They should. I mean, I take a look at those reports when I'm purely an LP on a transaction, and like I want to know kind of what's going on. Yeah, I mean, I'll take a look at it because I enjoy that stuff. But for the rest of them, they're truly trying to be passive. So they want to see the highlights, and they do want to know when good news is happening, but even more so, they want to know when maybe not so good news is coming through. Like maybe there's an issue with deferred maintenance that was uncovered, and you tell them about it 2 to 3 months after that happened. That's not something you want to sit on, right? So it's so critical to make sure that you're forthright. Don't just jump to conclusions and throw out an email that's half baked. But you do want to bring up the bad news. Like I think the good news is always fun and easy to share quickly, but you got to share the bad news even more quickly with the right framing and with the right context.
Agreed. Good advice. So you've been involved in a lot of deals. Tell me what two of the biggest lessons you've learned from working with the investors from the first deal to now having done quite a few.
Yeah, I think really qualifying as well as educating heavily up front is everything. And I say that coming from a place of, I'll give you a very specific example. We had an investor who really wanted to go into a deal with us last year. He's actually based down more in your neck of the woods, Gary. So he's in SoCal, and he had invested in other deals. He's actually a real estate agent by trade, and we had a great relationship. But into a third discussion, going into this one deal, and he was hot and heavy. He was ready. His capital was ready. He had looked through every possible piece of every document, and we get into this final discussion. And what I've learned from my experience that I didn't do early on, but I now do, and I'm so glad I did with this investor, was I was asking him, so where, if you don't mind me asking, investor, what capital sources are you planning on using for this particular investment? And what that conversation uncovered was that he actually was not on great footing. Like he actually had the ability to go and borrow to invest. And I'm not saying that that's a bad thing. There's plenty of smart ways for people to do that. But in this case, that led to the uncovering of a financial foundation that was very shaky for this guy. And I never want to put someone in a position where they're investing with their last chunk of change, if it's their last 50, last 100K, because we're going into a transaction that's going to last 5 to 7 to 10 years. That is not a win on either side. Going in anxious is going to lead to pain somehow. You're not even sure how, right? But it ended up happening where we got that discussion going. I heard that he was not on great footing. I strongly recommended that he does not move forward with this, given what I heard. And he originally took that pretty poorly, as you can imagine. When you go into a friend, if you're a real friend, I'd like to think you can go up and say, "Hey, man, you got a piece of lettuce in your teeth after you ate that salad." Silly metaphor, but like he came back around on the following conversation and said, "You know what? I think you're absolutely right, and I really appreciate you saying that, and that we didn't go forward with the deal." He is so highly engaged now. I'm thankful that he's actually gotten back into a better place. I still don't think he should necessarily be investing, but I think there will come a time where he will come back, and you better believe he's now going to other folks in his strong network and saying, "You know what? This is the firm that said I should not invest," and that goes such an incredibly long way. So that was one example. I think the second example I'll give you guys, just because we talked more about qualifying up front a little bit, is making assumptions and being careful around, just because you have a sophisticated investor, and I don't want to get wrapped around the axle here differentiating between accredited and sophisticated. We're just generally talking about a person who is savvy, a person who's invested, pretty substantial amounts of capital into maybe funds on the equities side. If they're big stocks investors, if they're traders, if they've done other types of fund investments, let's say, they know a lot and they are very savvy. They could probably run circles around me in terms of stock investing. So you can make the dangerous assumption, and I have made that dangerous assumption of thinking they really get this stuff. Like they really get how these single deal, single asset, direct investment syndications. They get it. They don't. And that's really on me to make sure that I'm taking the time, making no assumptions, and really going slowly with them to educate us through how these things run, and to be very nitty-gritty specific. 2 or 3 months after we kicked off a transaction from about, I think this was early 2018, and this investor emailed me with a pretty terse email. I won't name him, of course, but we have a good relationship now. And 3 or 4 months after we kicked this thing off, he was like, I don't understand. How come we're not getting this report and that level of granularity? And he started asking me a level of questions that indicated he thought this type of investment was the exact same as like the index funds he might go invest in. He thought that he was looking at the same types of things over on the equity side. And we had talked about this stuff, but we didn't talk about it enough to really make it stick for him. And so that led to frustration and anxiety. And since then, I've completely built out a much more robust onboarding and education program when folks are first getting into our flow and getting to know us in our investing club at MadisonInvesting.com, because it's better to do that up front than to have a frustrated person for 5 to 7 years, So I think along the way, you may learn some of those lessons the hard way when you're already in the deal. And so I just wanted to give you some meaty specifics around those two.
Yeah, I appreciate your care and integrity. Being proactive, onboarding an investor versus having to deal with those consequences later, where you have very few options. So that's really smart.
Exactly.
What have you found is the most important factor, the most important thing to investors?
I think being spoken to in a timely and adult manner. I think people can handle it if it's not great news. And so I think we've actually even talked about this before, Gary, but communication, it's when people are asked in our business, what's the most important thing to investors? 9 times out of 10, I've heard communication. But people don't really take the onion and peel that back further to talk about what does that really mean? Well, what it means is if something is not going well, you will go get the data first. You identify the root cause behind what's not going well. Just like I used to learn when I was doing, root cause analysis in my corporate career as a sales leader and operations leader. Don't go report back to the senior leadership groups until you know the root cause of what's happening and how you're going to go address it and how long it's going to take to resolve that thing. And so that is what matters the most. I think people want to be treated like adults. On the financial side, assuming you've got the communication down, people want to preserve their capital. People want to know the capital ain't going anywhere, and that is your absolute priority. I think right now more than ever, there are in the context of the coronavirus pandemic and the market forces at play right now. There's quite a few really competent multifamily operators out there that are having to make some tough decisions, about how they want to structure, if they have to do changes to distributions. And these are all things that, we don't wake up in the morning when I'm an LP and I've invested in a project that I'm not active in. I don't like seeing, my distributions aren't going to be coming in for a while, but I'm very okay with that if I'm told about it up front. And I know that it's in service of preserving the capital that I've invested. And so that's got to be the two things on that front is like communication, timely, root cause, solution oriented when I get it. And number 2, it's just please preserve that capital. We all know there's risk going into a deal and investing our capital, but what we are not okay with is if it's if it's put at risk because we're trying to meet a short-term goal as opposed to try to deliver overall on the project.
Great advice. I'm going to pass it along to Kyle to finish this up.
All right, Spencer, we ask every guest this final question. What is your asset management superpower?
It's got to be authenticity and communication. I would say that I will get on the phone with people if they have a question off the drop of a hat. And in terms of just right now, more than ever, I'm having conversations with people daily. And that means that sometimes it's just a friendly catch up. They want to know I'm still here. And they want to know just because this big event is going on that I'm leaning in. And so I think the ability to be not only myself, but to give real direct answers. And if you don't have a good answer, I will just tell them, hey, you know what? I don't know yet. Yeah, but I'll go find out. And let's get you that answer back. So authenticity wins 100% of the time for me.
Fantastic. All right, Spencer. Well, thanks for coming on the show and talking to us about our investor relations. Today, in summary, I learned communicate monthly if possible, be understood, don't worry about being smart, and it's all about relationships and real relationships, right? Don't be transactional, but really get to know who your investors are, which I think is a huge deal, not just about the investment itself. So if you can tell listeners where they can find out more about you.
Yeah, they can find me on MadisonInvesting.com. They can also follow me on LinkedIn. I'm super active on there and always posting my soapboxy thoughts. So they can find me on either of those places, and I'm always happy to connect.
All right, to all of our listeners, thanks for listening in. If you like this episode, please head over to iTunes or Stitcher. Give us a like, subscribe, and review so we can continue to grow this audience, and we'll talk to you next week. Hey, everyone. Thanks again for tuning in. We really appreciate your support. If you're interested in learning more about APT Capital Group and speaking to someone on our team, click on the link and schedule a call with us. We're here to help, and we'd be excited to speak with you and get to know more about you and your goals. Talk to you soon.